We are barely 2 weeks into the second month of 2026. However, when we look at the charts, when we listen to what's going on in the geopolitics in our industry directly, global finance, what's happening around us, a lot is happening. And if we look at fear and greed index over here, we see it's in the red. It's as low as 8%. That really displays the situation, the sentiment in the market right now, in the entire industry. There's a lot of fear going on, a lot of uncertainty, a lot of doubt. Will we get out of this condition? Will the markets get better? Will 2026 be the year of breakthrough? Will that be the year? Now, keep in mind, 2026 is the year where we told ourselves that we'll learn, not just learn, but apply what we've learned from 2025. We'll make the right choices. We'll make the right moves. We'll take the right approach. All that to position ourselves accordingly. Now, there's one thing to talk, but it's a whole other thing to act and apply. If one can choose to believe words over actions, we can agree. We all rather pick actions. So with that said, with that in mind, let's keep ourselves, let's remind ourselves that in our last community event, our previous community event on X Space or Twitter Space, we discussed the blueprint of how institutions that are market leaders today, we named them, the Amazons, the Microsoft, the Googles, we named them. Why are they market leaders today? What's their blueprint? And the blueprint is really straightforward. Capitalize fear. During chaos, bring structure. Find solutions. Take advantage of markets such as this right now. This is the situation where wealth is made. Find solutions to challenges. Find solutions to challenges that people are so afraid about right now. What are people so fearful about right now? What is it? Find it out. Find a solution to it. Use smart contracts to address them. Monetize it. That's how wealth is made. And that's how you become a market leader. We've seen this over and over and over again. And we've talked about it in 2023, 2024, 2025. It's time to apply it, because action speaks louder than words. So now that we have that in mind, let's jump right into this session today. First, let's understand what's causing fear. What's causing all that commotion? What's causing all the uncertainty, all the doubt? Let's look at it. First step, it's this right here. There's two powerhouses going at each other's throat right now. That's China on one corner, and on the other corner is the US. These are the two largest economies in the world. Two separate approaches. One is revealing their hands and talking about holding 8,000 tons in Fort Knox. The other one, we speculate that they probably hold 5 times more gold than they're actually showing or stating publicly. So why is that the case? Because you don't reveal your hands, right? You don't reveal your hands. We live in a very competitive world, but multiply that times 1,000,000 if it comes to finance. Every little edge, every little insight, every little more information, every better, more informative and more strategies that you have, the better. It's all about, it's a cutthroat industry, right? So meanwhile, does Fort Knox actually have the goals they claim? That's the question. We know China has them, but does actually the gold in Fort Knox that they claim they have, do they have it? Why is this a question? Because the last audit was made in the 70s, over 50 years ago. last official independent third-party audit was done over 50 years ago. Most of us were not even born yet. Let's move on. What else is causing fear? Paper Bitcoin. We discussed this many times. What is paper Bitcoin? ETFs, options, futures trading, derivatives, all these things. These are all paper Bitcoin. And in 2024, 2025, that was dominating the crypto industry. Keep in mind, in 2021, there was no ETFs. There were no institutions flooding like there are now with all these paper Bitcoin and paper other cryptocurrencies, with all these ETFs and futures and options trading. So what do they do? Why do they call it paper Bitcoin? First of all, you don't own the physical Bitcoin in your own decentralized wallet. You own, if you purchase ETF, you own a share. Beyond this, how are they accumulating this? You, like public companies such as MicroStrategy, they're literally selling their shares. What happens if you sell your share? You're literally diluting it. Why are they selling it? And in the process of their selling it, they are doing what? They're diluting their shares. So they're accumulating more debt as they're diluting investors' shares just to buy Bitcoin. And they did this at the top also. And this Bitcoin that you're buying on debt as you're diluting your shares is not a product that doesn't have a cash flow. And it's based on pure sentiment, emotions, narratives. Let's move on. What else is causing fear? Now, this is the largest one right now, the US national debt. Why is it so big? Because US dollar is the global reserve currency right now. So, and this debt crisis is so large that it's causing the most fear in the industry. It's rising very, very fast. It exceeded 38 trillion. This number is 38. It's approaching 39 trillion as we speak. And it's driven by and it's sustained for the last 25 years. The last 25 years, there were high level of trade deficit and deficit spending. This means rising interest rates like we have them right now. This means increased entitlement costs. So this means that interest payments now consume nearly 18% of the entire federal budget. And this also exceeds the government spending. And this means that US has to print more fiat just to cover costs. Let's look at that even closer. So the debt growth, it says that if it continues like this, at this rate, by 2035, it's going to exceed 52 trillion. Now, let's look at this. The debt has grown dramatically, and it's reaching 1 trillion every year. And it's comparable to the entire Medicare budget and actually the military budget. It exceeds it. Interest payments alone of foreign holders doubled in recent years, exceeded 292 billion just in Q3 alone. So deficit spending. So annual deficits remain around 2 trillion. Every 100 days, there's $1 trillion in addition is added to the debt. And this creates structural imbalance where borrowing is required just to fund daily operations. So you're in a situation where for the last 25 years, you've been having deficit spending, meaning you are importing more than you're exporting, meaning you're producing less than you're spending. So that means you have to print more or borrow more just to fund your daily operations. This means that higher debt levels. So your level of debt obviously increases more. And right now it's over 120% of GDP. And this is was more accelerated during the pandemic or wars or any other recession, right? So what are the risks? Consequences include decline in investor confidence. What does this mean? Before, the US dollar used to be the safe haven. US bonds used to be safe haven. During times like these, the world was rushing. 70% of the global wealth was ending up in the US markets because the US market was deemed, the US dollar was deemed a safe haven, and the US bond market was considered safe haven. But now, due to all these tariff wars, due to freezing of assets, due to weaponizing the dollar, due to 50 years of no audit of the Fort Knox, not knowing if there's gold even there, all these debt crises getting out of control, all these things are causing fear and uncertainty and decline investor confidence in the dollar and in the US bonds, US treasuries. So on top of all of this, there's further inflation. The interest rate is still high. To make the bonds attractive, you have to raise the interest of the bonds more. But as you do that, you're causing more inflation, and that you inflating the cost of debt. All right. So we talked about how the debt is the other challenge in this industry that is causing all the fear, the commotion, is the debt. So over 1 trillion annually, like we say, dollars, and this situation has been is increasingly getting worse, right? So now, keep in mind, what we're trying to find out is how we want to see how adults, smart money, is using this blueprint right now, how they're using this situation of fear and they're turning it around, finding solutions, finding solving these challenges, and then coming up with a solution and then monetizing it. So here we are. First step. There's this article talking about if ETH will ever reach 100,000. Keep in mind, we don't speculate here. We don't want to talk about prices, if it's going to hit or not. But the takeaway that I want to take away from here is the question. They say what it would take to reach there. So what it would take for others. So for some, it's a matter of time and adoption, right? And for others, it's unrealistic projection based on what? Limited global liquidity. So there's another challenge. So we looked at the fear. These are all the fear. What's causing fear? How is Ethereum going to get all this global liquidity on chain? How is the US going to handle their debt crisis? Are there really assets in Fort Knox? Are those commodities accountable for? What about all the weaponization of the dollar, tariff wars, weaponization of the US dollar? These are all situations that are causing a lot of fear. So now that we've covered the fear part of it, let's see how adults are moving on to address this. How are they answering this? How are they solving this? So the first step, launch a DeFi product on Ethereum. So BlackRock has now launched a DeFi product on Ethereum. And they've done that in 2024 already. And it's called BUIDL. BUIDL is tokenized treasuries. So tokenized US bonds. And BlackRock says that, secondly, once they chose the blockchain and they launched the DeFi product, which is a BUIDL, now they say that there will be only one common blockchain. One. Not two, not three, not four, just one. And I don't want you to take my word for it. I want you to hear it for yourself from BlackRock executives themselves. First, the head of digital assets of BlackRock, and then Larry Fink himself. So I hope that you can really hear the audio. Let me play it.
There was no question that the blockchain that we would start with our tokenization on would be Ethereum, right? And that's not just a BlackRock thing. That's really anybody who would enter the space. That's the natural default answer, right? That's really important.
All investments on a tokenized platform that you can move from a tokenized money market fund to equities and bonds and back and forth. We have one common blockchain.
There was no question.
So this is not just, there was no question. And this is not just a BlackRock thing. This is like a default answer for the financial market, for TradFi, traditional finance. Ethereum is their one common blockchain that they're coming to. And Larry Fink further goes and says that tokenized assets are going to be on one specific ledger, one specific blockchain. So you heard it for yourself. Let's move on. Tokenization now is the second thing. So we saw that, first of all, choose a common blockchain, Ethereum. Secondly, make it a default answer for all other financial institutions. Use the asset, tokenized assets. So you want to tokenize everything and then bring it on chain. You see how they're finding solutions to all these challenges we've talked about earlier. Why are they using Ethereum? We'll answer that. Why are they tokenizing all these assets? These are the answers to those challenges. We'll go there one by one. So right now, tokenized assets are only a little bit over 17 billion right now. It's nothing, just 17 billion of tokenized assets. And the key here is that these tokenized assets, real-world assets, are used as collateral for lending. So this means that, remember the challenge, the last challenge we looked at. Let's go back, just as a reminder. The last challenge we looked at is limited global liquidity. Where will the liquidity come from for ETH to reach 100,000? This is a legitimate question. Will Ethereum reach 100,000? For it to do that, it will need to have a tokenized global economy. It will need to have a tokenized global economy. It will need to have global liquidity on it. And it will have to compete and outcompete other blockchains. And here we are. We heard it from the man himself. There's only one common blockchain. It's the largest asset manager in the world. There's one, and they picked it already. They named it, they crowned it. It's a done deal. Secondly, the BUIDL token that they produced goes on the tokenized funds, tokenized assets. That is only at 17 billion right now, US dollars. These tokenized real-world assets are getting ready to be used as collateral. This means the liquidity is right here. This is what's going to be used as collateral, meaning that this will be turned into liquidity out of thin air. Boom, just like that. Once you can use these real-world assets as collateral. So that's the question that is being addressed right there. Where will the global liquidity come from? From tokenized assets. This is why they want to tokenize the whole world. So if you're holding these tokenized assets that we're about to see, let's move on first, step by step. So another thing I want us to highlight here is that we're looking at 17 billion right now. There's only 17 billion, as you can see. But now, let's look at the global bond market. This is the most liquid market right now. On a global scale, it's approximately 145 trillion. Yes, with a T, trillion. And right now, this is the global, but let's focus on the US, right? Let's just focus on the US alone. If you focus on the US alone, you're looking at 58 trillion. 58 trillion, right? The United States represents the largest share, 58 trillion, while China is the second largest. So right now, with roughly half of that, so 58 trillion, and let's just say out of the 58 trillion, only 1% comes in, just one. What's 1% of 58 trillion? It's 500 billion. 500 billion. Let's leave it at that. Let's leave it at that. But if we say, let's say 1/3 of it comes on chain, because why are we saying that? Why are we saying that? We're about to answer that question. Why are we saying that? This is the reason why we're saying that. As of early 2026, the US Security and Exchange Commission talked about how they're not just supporting tokenized assets, but they were talking about how within the next 2 years, right here, equities, specifically equity, this is the stock market, could move which between 70 to 700, let's say 60 to 600 billion dollars could move on chain within the next 2 years. This is the stock market. The stock market is obviously smaller than the bond market. The bond market is much, much larger. So, but even the stock market alone, and this is 0.1 to 1% of the stock market, is supposedly, this is between this, that is also coming on chain. So if you combine the bond market and the stock market alone, which BlackRock is getting ready to bring on chain, just BlackRock alone, they have over 14 trillion in assets alone. And let's say they tokenize the 14 trillion. And they already chose Ethereum to do that on. But just to remain humble, just to make a point, within the next 2 years, obviously not all of that is going to be on chain. It will gradually be added. But let's say within these 2 years, only 1% comes on chain. It will still be above $1 trillion. Now, what I want to highlight is that liquidity coming in and market cap, there's a multiplier. It's not the same. It's not the same. So Ethereum's market cap does not expand on a fixed 1-to-1 ratio with liquidity inflows. What this means is that if you put in $1 trillion in liquidity, that doesn't mean that the market cap is going to go up by $1 trillion. It's the opposite, actually. The market cap expands faster. Rather, it expands exponentially due to the price increase, with liquidity acting as stabilizer. So what it means is that with little liquidity, the market cap can exceed and expand very, very quickly, specifically due to the multiplier effect. And what does that mean? Market capitalization is not a direct measure of cash inflow, but rather a calculation of the last trade price multiplied by the total supply. Okay, let's make sense of this. This means that increased liquidity reduces price volatility, as we know that the deeper the liquidity, the less volatile the market is. But what I want us to understand is that the rising liquidity, the more liquidity is increased, the higher the market cap. But expansion is not linear function of cash flow. This means that it takes less liquidity for the market cap to go up because the staked amount of Ethereum, the less, okay, with a significant portion of ETH staked and removed from circulation, liquidity can tighten potentially causing higher price volatility and market cap changes, because Ethereum can be staked, and this staking causes removal of circulating supply. This causes a larger move in market cap. So if $1 trillion in fresh liquidity enters the market, there's potentially a 10x of that in terms of market cap. So the market cap multiplies even faster and more than the liquidity you put in. I hope we really understand that. So let's say $1 trillion in pure fresh liquidity enters the market, Ethereum specifically, there's a 5 to 10x of that in market cap. Way more. It's a multiplier. And I just want us to understand that. And another thing I want us to look at here is how much is already staked. Even though Ethereum price is roughly around 2,000 right now, or right below 2,000, Ethereum's staking ratio just hit a new all-time high, surpassing 30% staked of its total supply is staked. So 72 billion right now, US dollars, is now locked, and over 1 million validators securing the network. So with staking means secured network, security of the network is solid. The volatility decreases, and there's supply is being removed from circulation. Market cap and price go hand in hand. The higher the market cap, the higher the price, obviously. So we see that Ethereum staking climbs to all-time high. This is already happening. We see how BlackRock chose Ethereum to develop tokenized assets, tokenized treasuries, and real-world assets like tokenized stocks, tokenized, let's look at them. Let's look at it right here. Let's look at it together. So BlackRock, next step, what they did, now they're tapping into DeFi, and they're partnering with Uniswap for direct on-chain BUIDL trading. BUIDL, again, is BlackRock's tokenized liquidity fund. BlackRock's institutional digital liquidity fund, right? And they're partnering directly with Uniswap. You can trade tokenized, BlackRock's tokenized treasury fund, BUIDL. You can now trade it on Uniswap, Uniswap X. Before we get too excited, it's for institutions only. If you have 5 million and above to spend, then you can participate. It's for whitelisted and eligible traders only. I want us to really understand that. So it's a collaboration with Uniswap and Securitize. But do we understand what's happening right now? Do we really understand what's happening right now? So it's only available to eligible investors. So if you have 5 million and above, if you're being whitelisted by BlackRock directly, that's when you can invest. It's not like you can just go there, you and I, and you can just invest our $20 in there. No, you have to have at least 5 million and above to participate, right? So I want us to understand that. So keep in mind, what we're doing right now, we're looking at how the BlackRocks, the JP Morgans, are addressing the challenges while the market is fearful, like we're seeing right here. The market is fearful right now, right? We're at 8%. Markets are down. People are panicking, selling, uncertain, paralyzed with thoughts, anxiety. Meanwhile, adults, smart money, are building infrastructures, finding solutions to what the market is fearful about. They're finding solutions and they're monetizing those solutions and enriching themselves, positioning themselves accordingly. That's how you become a leader. Let your actions speak for you. And this is what's happening right in front of our eyes. We read all the challenges at the beginning of the session. And now we're seeing how the challenges we read at the beginning of the session are being addressed one by one. Now this BUIDL token is on Uniswap and it's being used as collateral. Why? Remember one of the challenges that was said? It needs, where will the global liquidity come from? From these tokenized assets that are being used as collateral. How will Ethereum hit 100,000? It needs to outplay its competition, other blockchains. It needs to be the global liquidity hub. It needs to tokenize the global economy. Don't we see all of these things happening? These things are happening right in front of our faces. But let's go even further now, community. Let's now hit the jackpot, because keep in mind, there's a lot of fear going on. The weaponization of the US dollar, the tariff wars, and all the US debts and sanctions and all these. Now, let's look at something further. This is now where we really, really understand what's happening, hopefully. For years, we've been talking about moving finance on-chain. To see DeFi upholding values, and this is what makes Ethereum shine. Now, it's permissionless access. You don't have to ask or have permission of China or US or Russia or Swiss. It's permissionless. It's decentralized. That means it's under our autonomy. We have control of our assets. We don't have to hand over our seed phrases to a centralized exchange, to a third party. And it's trustless. You don't need to trust anyone. Do we see how BlackRock is addressing all these fears? No more do you have to fear the US sanctioning you, freezing your assets, weaponizing the dollar, losing control over the monetary policies by running deficits for over 25 years, running debt over 38 trillion. No, now this asset is a technology that is permissionless, that gives the world full access in a decentralized way, and it's trustless. No need to trust any third parties, any agencies, any governments, no one. This is how you address challenges, community. And this is the world's largest asset manager, BlackRock, that is doing that. This is not just some local startup with some anonymous developers. This is the largest in the world, the largest asset manager. And the CEO, the founder of BlackRock, happens to also be the co-chair of the World Economic Forum, Larry Fink. One and the same person. This is the same agency, organization, that is setting up meetings on an annual basis in Davos, Switzerland, and dictating how the next decade or decades of the global economy is going to look like. And they decided that it's going to be tokenized. And it's one blockchain is going to be used. And that blockchain is called Ethereum. And that blockchain is going to be the solution for the US debt crisis. That blockchain is going to bring demand to the US dollar and the bond and the US bonds. That blockchain is going to be trustless and bring back trust. It's going to be permissionless and it's going to be decentralized, unlike the current monetary system that is weaponizing the dollar, that is sanctioning everyone, building tariffs, that is weaponizing it in terms of freezing assets. All that is gone. This is how you find solutions to a challenge, and then you monetize it. This is the perfect blueprint, community. So BlackRock offers DeFi trading on Ethereum, like we said. But community, it's not just Ethereum. It's Aave as well. I mean, it's not Uniswap alone. It's Aave as well. Uniswap is the largest decentralized exchange. We're about to look at it. But Aave is the largest lending platform. And it's also adding a third-party integration with who? BlackRock's same BUIDL token again. So this BUIDL token that is tokenized US treasuries, do we see what's happening? It's being traded in a decentralized exchange, Uniswap. And then it's also being used as collateral on Aave, the largest decentralized lending platform. So if you hold this BUIDL token that happens to also be yield bearing, meaning you earn yield on a weekly basis, paid on a daily basis, but it's paid out on a monthly basis in USDC, you are getting this. And you can use this as collateral to borrow money using your collateral, using this as collateral. Do we see how they're solving the challenge of bringing demand for the US Treasury? So if you're in DeFi right now, the most liquid tokenized asset is BUIDL, which represent a tokenized US bond, US treasuries, US debt. And it's the most liquid right now. And it's using the largest decentralized protocol, Aave. And it's traded on the largest decentralized exchange, Uniswap. Do we see how the largest asset manager is solving these challenges? Let's move further. Out of the 95 billion that is locked in DeFi, 54 is on Ethereum. That's roughly 60%, give or take. So more than half of all liquidity locked in DeFi is on Ethereum alone, as you can see here. And let's look at the largest protocols, community. The largest protocols. So you see 95 billion. The 95 billion, 54 is on Ethereum alone. And the largest protocols, like we saw, Aave. Aave is the #1 lending platform with over 22 billion in locked, total value locked. And then here, number 13, we see the largest exchange in the entire industry, Uniswap. Both of these are using BUIDL, which is BlackRock's product that is developed on the Ethereum blockchain. So if we come back here, I want us to really understand this. Aave protocol remains one of the most dynamically developing lending platforms. So it's a lending platform. And BlackRock is gaining access to a token backed by short-term US Treasury bills. This is what we were saying. BUIDL is backed by US Treasuries. It's the tokenized version of US Treasuries. And this token is used. They're using the token as collateral or as a treasury. Do we see what's happening right now? Everything that is happening in the real traditional financial world is taken and is being done on Ethereum right now. Why? BUIDL is an Ethereum-based token. This is not just me talking. This is fact. BUIDL is an Ethereum-based token, and it's backed by short-term US Treasuries. Do we understand what's happening here? The most liquid asset in the world has just been tokenized. US Treasuries have just been tokenized in the form of BUIDL, and it's happening on Ethereum. And it's used as collateral on Aave, the largest lending platform in the industry. And it's traded on Uniswap, the most decentralized exchange in the industry. And here we are panicking, worrying, overthinking, not knowing what to do because the markets are volatile currently. Meanwhile, smart money is finding solutions how to solve the fear, the chaos, the uncertainty, the doubt, and monetizing it. Come on, community. 2026 is our year to do the right thing, to make the right moves, to position ourselves accordingly, and to win. So this is why retail won't be back for a while, because they're still stuck in the meme era where they get rich quick and out. This trade doesn't seem to work here anymore because crypto does no longer feel like a lottery. Crypto nowadays is literally real world assets. What solutions are you bringing? Let's summarize what we just talked about. The real world is integrating real world assets and using it in DeFi as lending and as collateral. They're using real world assets as DeFi lending as collateral using one blockchain. And that blockchain is called Ethereum, and it's the Ethereum standard. So, and it's the industry standard. So they submitted an Ethereum improvement proposal, and it's the Ethereum standard now for any market participant to use. The standard is Ethereum. It's the Ethereum standard now. Tokenized real-world assets for DeFi lending used as collateral on Ethereum is the new Ethereum standard. There is one blockchain. This blockchain is called Ethereum. This is where all the infrastructures are built. This is where BlackRock chose and JP Morgan chose to use treasuries, tokenized stocks, tokenized ETFs, tokenized commodities, you name it, and then use those tokenized assets as collateral to generate global liquidity. As you do that, you pair these global tokenized assets with the US dollar. So you bring demand to the US dollar. And as in this brings demand to the US dollar. And as people are using US dollar or purchasing US dollar to buy these tokenized assets, these stablecoin issuers have to back these stablecoins with US treasuries, bringing demand to US treasuries. So you see how blockchain is being used as a solution for the debt crisis, to manage the debt crisis, to manage the fear and loss of trust in the US dollar, in the US economy, in the US monetary financial system, in all these tariff wars and threats with freezing of assets. All that is taken care of through a new technology known as the digital ledger technology that is based on trust. Let's go back there. That is simply based on trust. That is decentralized. That is permissionless. Is decentralized. And that is trustless. This is how you solve a challenge that the world is so fearful about, community, and then you monetize it. So now, what do you need to understand in 2026? 2026, what you need to understand, that be part of an ecosystem that is solving challenges. Point blank, period. If you're not part of an ecosystem that is solving the inflation challenge by banning the supply and removing it from the total supply, not just from the circulating, the total supply, remove it. If you're not part of an ecosystem that is actually actively, with every trade, retaining liquidity, and if you're not part of an ecosystem that has a system that gives you sustainable staking rewards by using its volume efficiently to accumulate USDC distributions in perpetuity for the stakers, then you're going to miss out on this liquidity rush. Be ready and be part of an ecosystem that is going all in on, while the world seems to be crumbling and falling apart, and there's so much chaos and noise and uncertainty and fear. Look at the industry clearly, rationally, find solutions to the chaos, bring structure, find strategies, solve these challenges by bringing mechanisms into play, by using this digital ledger technology, smart contracts, to solve these challenges we faced in this industry. This is how you become a market leader. This is how you lead the industry. And now it's not enough to just do that. Educate the community about it. Tell the community about it. Bring awareness about it. And that's what we do on a daily, weekly, monthly, yearly basis throughout. So community, this is it for today. I hope the message came across. I want to thank you all for participating in today's event. As always, Let's ensure that we engage with the tweets. All of them are out: Killer Whale, Survivor, and Bull Run. And I also want to encourage us to keep growing in 2026. And let's make rational decisions, not based on sentiments or emotions, but based on what we've learned or what we're learning on a daily basis, on a weekly basis throughout this ecosystem. We appreciate you all, community. Wish you a wonderful, wonderful rest of the day. And till we meet again, bye-bye, everyone.